Welcome, everyone, to another Market Conversations. I'm Jerry Hall, and I am absolutely pleased to bring you a show tonight that is going to be packed with some incredible information. I've got an incredible guest backstage. It's Justin from TaxBit. We're going to talk about the Robinhood situation. We're going to talk about getting ready and getting our ducks in order so that we're ready for the tax man for the 2020 tax year that just happened. We also want to make sure that we address all of your pertinent questions. So get those ready, get those fired up, put them in the chat, start with a big fat capital Q so that Brady knows that you're actually asking a question to either myself or Justin, and we'll make sure that we do our very best to get you included in the show. But before I bring Justin in, I just wanted to take a minute and kind of reflect on this week that we've had, right? Where, a much to do is being drummed up about a Reddit group pumping up a particular GameStop stock, as well as some others like AMC, etc. Ones that the established marketplace considers not worthy. And it was through a community that some of these pretty big hedge funds got smushed, right? They got their short squeezed, and I couldn't be any more happier. Anyway, I think it's a testament to what can happen when we come together as a community and we utilize these platforms like YouTube and Twitter and Facebook and Instagram and Snapchat and all this stuff. When we come together, some pretty powerful things can happen. Now, in the crypto world, if you've got some skin in the game, you've got to be overjoyed that we are seeing public announcement after public announcement of companies either adding Bitcoin to their profit and loss category, which means it's part of their business itself. PayPal is an example of that. Square is an example of that. And then we've got these companies and institutions putting it on their balance sheet. Obviously, Square is an example of that, and MicroStrategy is probably the most famous. It's exciting times to be in crypto, and it appears that the momentum is swinging our way. But let's bring our guest in and start talking crypto and taxes. Everybody, welcome Justin from TaxBit. Hi, Justin.
Hey, Jerry. Excited to be on with your guest. Always exciting to have a drink with you on a Friday night and chat crypto.
Right on, man. So I'll tell you what. Although I'm extremely bullish on TaxBit, you guys are my absolute favorite platform out there dealing with cryptocurrencies for many reasons. Number one, you're kind of unique to your situation, the tax optimization element that TaxBit brings to the table. But before we get into that, I want to get to know you just a little bit. Tell me about your crypto journey. I think it's always important that people, when there are going to be people on this show tonight analyzing you because you're representing TaxBit, and basically how they feel about you is whether or not they're going to make a decision to hit that affiliate link that I've got in the description of the video. So I'm not to put you under any pressure, but sell yourself. You're on.
Yeah, I'd be happy to give my background here. So I actually, I'm a tax attorney, one of those nerds. And so my first exposure to cryptocurrency was in, around 2014. I had a client, a Fortune 500 company that came and said, hey, we're thinking about this crazy idea of, accepting Bitcoin on our platform. We'd like to, sell goods and services and accept Bitcoin. But this is still, kind of this new concept, this, cryptocurrency. What are, the legal ramifications here? And, we dove deep. I led a team here and working with the general counsel of this company into all the issues and regulations here. We went into, privacy regulations, security regulations. But ultimately, one of the biggest hangups that we had in pushing this across the finish line was tax. The fact that cryptocurrency is a capital asset, and every, you know, purchase of it is a, you know, you have a cost basis, never disposition, you have a recognized gain or loss. And so that, you know, record keeping and how to, you know, keep track of all of that and report it at the, you know, enterprise level was a very difficult problem. And ultimately, you know, I worked with multiple clients on cryptocurrency taxes in the very early years, you know, very first regulations. And it just became, you know, very apparent that, you know, the tax complexities that need to be automated through software. And so ultimately it led us to, you know, founding TaxBit and getting involved in this industry very early. And we decided to flip this on its head a little bit and decide, you know, sometimes people view tax reporting as just this kind of evil, but, you know, ultimately, if you do proper planning and you dispose of assets at the right time, you can actually recognize, you know, losses and, you know, receive a tax refund just through optimal planning of, you know, hey, I'm going to trade this asset rather than this asset because I know what my position is in this asset, and I, you know, I can maximize my potential gains and losses. And our ultimate goal here is, how can we give people the tools to know before they trade, hey, okay, this is the tax obligation I'm incurring, and ultimately give people the tools, that the tax planning tools that, hey, I can, you know, prioritize losses and assets during dips so I can actually receive a tax refund at the end of the year through proper planning.
Right. Well, I'll tell you, one of the things that I found the most interesting and probably the most attractive about TaxBit is twofold. One, how accessible you are through social media platforms. And that was true even before you acquired the talents of Mrs. Social Media. That's right. I'm talking about Michelle O'Connor, who was my favorite Twitter personality representing a crypto platform when she was with Uphold. You guys got the scoop of the century, nabbing her off the free agent wire. Oh, is she here? Hey, Michelle.
Hey, Michelle.
Oh man, now her head's getting bigger because I'm going on and on about her. Anyway, so you guys have been so responsive in the social media scene. I'm curious, in the background, because I know you're all business. You guys do a great job doing your business. What do you anticipate as clarity for these other assets start to kind of emerge? I'm talking about, for instance, let's talk about XRP. Should it actually remain a virtual digital currency in the, like it is with the eyes of the DOJ and FinCEN? What do you think, as a tax attorney, it would take for the IRS to change its tune on that particular asset or assets like it that are deemed virtual currency?
This is a great question, Jerry. So XRP is a little bit, you know, unique, and we've heard a lot about this. So I'm going to break this out. This can be a little confusing for, you know, the average person. So XRP's been having some, you know, questions on, hey, is this actually a security as labeled by the SEC, which you know, opens up a lot of other implications. Hey, was this properly issued? You know, was this issued to accredited investors? It really opens it up to, you know, major SEC questions. So yeah, XRP may be a security in the SEC's eyes. That's what's currently being litigated. In the IRS's eyes, there's a distinction. You know, XRP is not a security as defined by the IRS. It may be as defined by the SEC, but we're under kind of a different regulatory body. So as defined by the IRS, XRP would be labeled as property, the same. So the same thing, you have your capital gains, your capital losses. So I think, you know, as far as the tax landscape goes, there's a lot less confusion on, hey, how should this be taxed? But as far as, you know, the SEC regulations, hey, was this properly issued? That's kind of a different question. So I think it's kind of interesting having two different regulatory bodies. You know, the SEC and the IRS both classify the same thing using different terms. One saying, hey, this is a security, this is property. But yeah, in the IRS's eyes, it'd be viewed as property.
Well, I guess maybe a more direct question to you, being that you are a tax attorney, would be, what would it take for the IRS to change its tune on a virtual digital currency that is used for payments? It's not property, it's a digital currency to be used in payments.
It's a great question, Jerry. I can tell you, based on my insights and internal communications, that I don't think we're going to see any major changes on this classification anytime soon. And the reason being is because, most cryptocurrencies can fluctuate in value heavily. As we've seen, it can go up in value 20%, it can drop in value in 20%. The IRS, for the most part, when, assets move at that level of volatility, wants its cut, essentially. So, same thing with, there's a lot of other assets that you can find analogies to, but typically when something, can appreciate that heavily, it's not going to be, labeled as a pure currency, though we may think that makes sense. There may be an exception here for stable coins. We may see stable coins start to be viewed more and more like actual currencies as opposed to, capital assets. So I think that's kind of the point to watch maybe with that. Okay. With the IRS. Could we see that distinction play out between, the volatile assets and the more stable coin type assets? And maybe could we start to fight for that currency classification for the stable coins that are actually, looking more and more like traditional currencies, just, tokenized?
Well, I'll tell you what, it would be, for me, right, it would be interesting to kind of understand the mechanism for which the IRS actually is willing to change a classification. Like I don't know anything about it. Is it something that Congress, if Congress were to, through the House and the Senate, create, let's call it some wild, crazy thing, we'll call it a taxonomy act, right? And classify, give clarity. We'll have property, we have utility tokens that are currencies, maybe stable coins and XRP and XLM are part of that. Then we've got network platforms like Ethereum and which are basically just businesses in cyberspace for all intents and purposes. I mean, that's all they're doing is creating a marketplace. They're just a business, basically. Okay. If you don't know the answer to that, that's cool. But if you do, sum it up in a sentence.
No, but that's a great question. Could Congress make this change? Absolutely. Congress could pass, a comprehensive bill that covers a lot of these different areas of, how crypto should be taxed, how SEC regulations should look to crypto. The bigger question is, will Congress? I've spoke with, many congressmen, legislators on the issue, and I think the appetite may be low. It can be very difficult to get things through Congress and even to just get things prioritized. I mean, it's very difficult to pass comprehensive legislation. And as much as, my communication with the Hill and other things trying to, push forward on some of these issues, a lot of times they can just hit a wall and they can say, this just is, we have other things that are a priority right now, coronavirus relief or some other issues. Whereas, but I don't think that's the end, though. Not all things, really have to go through Congress to, make a change in our system. A lot of things can be done through administrative law and through regulatory agencies. And those really are the most knowledgeable people in the space right now. So I would keep an eye out for, the Treasury and working with the IRS. Treasury can promulgate regulations on these issues without congressional approval. And, we can start seeing some of these clarifications coming through administrative rulings through, the Treasury Department. So in a perfect world, I would love to see something pushed through Congress. and I've talked with many congressmen on how to get this done, but at the end of the day, where I really think we're going to see a lot of the movement and the regulations and the things that are going to matter on a day-to-day basis are going to be through Treasury regulations.
Well, that wouldn't hurt my feelings. You know what I mean? It really is going to be a matter of, does the United States, especially with the current White House that we have in place right now, do they want to open the United States up for business? I mean, it doesn't take somebody with that much hindsight to look back to the internet and say, all right, when the Clinton administration created a sandbox, right, and created kind of a light touch, go ahead, build, let's see what you guys can do kind of thing, it produced some of the most crazy wealth creating businesses that the world has ever seen. Amazon, Facebook, Google, blah, 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 blah. And now TaxBit, right? No internet, no TaxBit. So I'm grateful for the Clinton administration for doing that. And maybe the Biden administration will take a look back and take a page out of that playbook and say, okay, all you little 8 different regulators and the IRS and the Treasury, let's come together over the weekend. It's on. We'll have a party on the taxpayers' dollar. Let's get this thing hammered out and get to the business of building stuff. Speaking of building stuff, since I have you here, Justin.
Yeah, I want to comment on that.
I want to talk just briefly. Robinhood and the fact that they've literally put the kibosh on crypto, and what does that mean for all of us that had dabbled in Robinhood, buying some assets? Do we have to sell our assets and take a tax hit? I mean, what's shaking with that? Your thoughts?
Well, yeah, that can be a little bit of the difficulty with halting trading on Robinhood. It is a closed loop ecosystem as of now, so you can't really transfer your crypto off the platform. So your option really is, hey, do I want to exit my position and sell, which would cause a taxable event, or do I want to continue to hold my assets on this platform? So that's kind of the calculus that each individual user will have to take. The one thing that we could do and help with in that situation is we can help. We have the forecasting tools through tax optimization to tell you, hey, if you sell your assets on Robinhood, you will recognize either a capital gain or a capital loss. And if you're going to incur a capital loss, if your basis is below the current market value, then maybe you should just sell and you can, claim that loss, increase your tax refund, and then go buy on a different platform, and you can be kind of, free there. If you're going to incur a large, taxable gain, then you might want to think about it. Is this worth incurring this gain to, exit this platform? There can be, trade-offs there that I think it really depends on each unique user's situation based on what they bought in at and what it would cost to exit the platform.
Well, let's dovetail that into one of the things that I really love about TaxBit, and that is the optimization features. And if you would elaborate how advantageous it is to for instance get your 2020 1099's in order now using the TaxBit optimization, because it can definitely play an advantage in our investment strategy, at least for Q1, Q2, possibly Q3 of this year. Let's talk a little bit about that.
I would love to. This is something I'm very passionate about, and there are so many tax optimization opportunities in cryptocurrency because of its volatility. So let's think about this for a second. Let's say I bought in a Bitcoin for $10,000, right? Got a pretty good deal. Bitcoin, trading above $30,000 now. But Bitcoin through in 2020, it actually fell to mid $3,000, right? Subpar 3,000. Through tax optimizations, you have the opportunity throughout the year. You should be thinking, hey, when cryptocurrency starts going down in value, I should really sell, reset my position, claim those losses, buy back, and then go in long on this asset. So for example, if I bought Bitcoin for $10,000. When Bitcoin tanked to $3,500 a Bitcoin, I should sell my Bitcoin right at that low, repurchase my position, so I'll now have a basis that's lower. I now get the ability to claim those capital losses today, increase my tax refund today, reset my basis, and then I can just hang on to that Bitcoin as it appreciates in value. And then I may not want to sell it, and I may want to defer those gains, but I get the benefit, of appreciation and accession of wealth a lot quicker. So that's basically the point. Is crypto does this and this. We've seen, even this last month, we've seen cryptocurrency go from $40,000 to $30,000 and back. And the fact, you should be thinking tax optimization this entire time. Hey, if I bought in at $40,000, if this dips to $30,000, let me sell, claim $10,000 in losses, reset, and keep going in this asset. And that's what we do. And we try to, automate these tools to say, hey, send me a text message alert when, I have the ability to claim whatever the threshold is, whatever a user wants to put in. If I can claim $5,000 in losses, then hey, send me a text message when I have the ability to claim $5,000 in losses, and we'll alert you, and you can go make that trade.
Well, one of the things about this optimization angle here is that it kind of is counterintuitive for most of us, right? Most of us are thinking, okay, listen, if I bought in Bitcoin at 10,000 and it's dropped down to 3,500, the value that I lose, right? But the difference between 10 and 35, which those of us that are doing math at home on a calculator, is $6,500. I take a $6,500 a hit directly in the backside. That's never any fun. But now you're telling us, okay, listen, there's a way to game this, because if you're going to be long Bitcoin anyway, right? If you're long the asset, taking the $6,500 hit, buying, like, for however many dollars I got from selling the Bitcoin, buy as much Bitcoin at 3,500 as that'll get you. You've reset the position. If you honestly believe 10,000 is going to be in the rearview mirror anytime in the next X amount of year and a half, 2 years, I mean, you get an opportunity to write that loss over X amount of years, right? You can defer, or, right? I mean, you can capture losses over multiple years. You don't have to take it all in one lump sum.
Yeah, and that's the interesting thing with cryptocurrency right now is, in the IRS's lens, it is taxed as property, which property is taxed very similarly to, stocks and other securities, right? Capital gains, losses, same types of systems. But there is one exception in the tax code, and that's wash sale rules. With securities and stocks, you have to, wait the 28 or 30 days to, repurchase your position in that asset. So if I claim that, $6,500 loss, as you said, in the stock world, I couldn't immediately go, repurchase that asset back, claim that loss, and then repurchase it. That's not true with cryptocurrency at this point. That may change in the future. We could see something from, the IRS and Treasury that say, wash sale rules now apply to property, such as cryptocurrency. But in the meantime, they don't. Wash sale rules do not apply. So that's what's kind of unique about cryptocurrency is that, I mean, even in the stock world, right? You should be thinking about tax optimizations and, how can I claim losses and still go long on an asset? And I may have to sell this asset and then wait 30 days to repurchase it. But that's what's interesting about cryptocurrency is there's so many more opportunities for tax optimizations because those wash sale rules don't yet apply. And so you can repurchase your asset. That is clear at this point. And so Whether that's changed in the future, we'll see. But at this point, it's something that really should be an investment strategy that people can take advantage of.
Exactly. It should be a tool in the toolbox. Whether they do or don't is up to them and their own personal CPA or whoever handles their affairs. But it's a tool that we should not neglect. I want to put this out there for everybody in the audience. If you'd like to bring a question for Justin in studio, we have both the Market Conversations hotline, which you just dial in with your telephone. Brady, how about this? Brady, if the hotline is working, if we've got the technical ability to do so, throw the phone number up on the scrolling thing, the banner underneath. Or if you want to come in live studio and ask Justin a question, say, hey, Brady, send me a link, and we'll get you a link, and you can come in studio and ask Justin your question. Justin, let's transition a little bit here, because my audience, we have really been digging in week by week about investment strategy. So obviously the TaxBit stuff with the optimization is huge. Folks, hit the link in the description below. Make sure you use the code beyondmoon. You give the channel a little credit. Also, you get 10% off your subscription, which is kind of cool. And then while we're waiting for people to possibly come in, what have you, we'll take some questions from the audience. I see one from Bill, but I want to address this point before the show gets too much fun, before we're having too much fun. And that is for those of us that are building passive income strategies using platforms like BlockFi and Celcius and Voyager app and Nexo. Nexo I'm real huge on, by the way. I plan on personally building a passive income to support myself for the rest of my life through my crypto, my assets. The IRS sees it as property. If I'm selling interest that I'm earning on my crypto, is it interest dividend income, or is it a capital gain from selling?
It's a good question. So the platforms you named, I absolutely love as well. I mean, like, I put a lot of my assets in BlockFi. You can't not when you're getting, guaranteed interest rates ranging from, 7 to up to 11, 12%. The returns are incredible, with especially the fact that, guaranteed returns. So
you ain't gonna find that in the bond market.
I mean, I think it's one of the best kept secrets. I'm like, well, why isn't everyone joining, some of these platforms, especially, some of the really, legitimate ones, such as, BlockFi and some of the other ones that you named. So interest, yeah, that's not classified as, a capital gain. That'd be classified as income. So exactly what you said, it's passive income generating activity. I think it's a no-brainer. You should, park your crypto in, these vehicles that, not only can you increase your wealth through the crypto appreciating, but you also increase your wealth through, the interest rate returns. So this would be considered, an accession of wealth in the IRS's terms, which would be income. So it'd be the same as, if you had a job as a contractor or anything else. It's just ordinary income, the same income rates depending on your income brackets.
Well, we got a question here from Bill Gould. Question: does TaxBit also have the ability to add in the compounding interest some of us earn daily, monthly, yearly on our crypto portfolios, and also project our future portfolio earnings?
That's a good question. So I think we'll take that in two parts. Yes, TaxBit absolutely has the ability to track, your interest deposits. And it can be hard to know, right? Like, you might have money in, Block, whatever it is, your interest account, and your deposits may be, I might get 0.012 Bitcoin deposited on a monthly basis. What does that equal at whatever time? TaxBit will pull all that in, hey, you're actually receiving this amount of value of income throughout. Projecting, that's an interesting question. I'd like to flush that out more, where the user's coming. A lot of these platforms are, guaranteed set rates. So it's very easy to project, but massive volatility, I'm not quite sure. Like some of the variable interest rates, there may not be, a really great way to project that. What's great about TaxBit is we really focused on known outcomes. Hey, if you trade this asset, you will realize this amount in capital losses. So there's really no question about it. I think where that question was kind of getting is, how do you project a variable interest rate? And so that's an interesting question. I'm sure there's interesting tools, but that's not really we don't really project unknowns, because oftentimes you'll be wrong on that. We really are, projecting known outcomes based on available information.
Well, I've built a spreadsheet that is for this exact type of thing. So there's a savings wallet, and you can enter your data and get your daily, weekly, monthly, yearly compounded daily interest rate in the form of both how much it would be in dollars based on a price that you put in, and the amount of the asset based on the percentage that that particular site says it's doing. And I got that for the savings. I got that for the loan. I got that structured for a loan repayment period. And once that spreadsheet's completely finished, it's going to be available to all the folks in the Patreon group, the Beyond Moon Investment Club, which will be launching February 1st. I saw some other questions. And I don't want to, okay, John O, question. When is TaxBit going to be able to sync with Atomic Wallet? A lot of my crypto swaps were done on their platform. Well, wait a second. Atomic Wallet has an API, right?
Yeah, I'd reach out to our support team. We're at it. We support, hundreds of exchanges, quickly adding, all of the different wallets. So I would say very soon in the next few months, if our support team doesn't already support Atomic. So I'd have to check with them on that particular wallet.
And here's a tip for any of you with a situation like what John put out there with the Atomic Wallet. You've got TaxBit, one of the most engaging entities in this space in social media. So whether it's on Facebook or Twitter, if you do something with an @TaxBit, and I would add Michelle O'Connor in that. See, the thing about it is they respond to you. So just like we had a few thousand people run the GameStop stock to the moon, you get a couple people on Twitter pounding Michelle O'Connor, hey, get this done. It gets done. That's what I love about you guys.
Jerry, I appreciate that. So we are very, Michelle's on top of it, right? She builds communities, and that's what she's
the best, dude.
She absolutely. I'm also.
When is she going to get a raise? That's what I want to know. When does Michelle get a raise? Is it 6 months into her employment? 9 months? I vote for 6. 6 months. Give the girl a raise.
Maybe it's earlier. Michelle's a key. Michelle's a key player on this team, and she's really, she's really the way she interacts with the communities is everything, and that's so important to us to be involved in the community and know what's happening on every level. But I also want to throw out a shout out to our support team. So yes. we have one of the largest support teams in all of crypto tax in general, and that's something we really believe in. We have over 10 support reps, and that keeps on growing every single week. And we are user obsessed. And if our users have questions, please bring it to our support team. And if our support team doesn't know, they will escalate it to our CPAs or our tax attorneys. And we really want to be user obsessed and just provide this incredible experience. So you will not be ignored here, and we will be, whether it's social media or just through our in-app support, come just chat and say hi to us. We want to take care of you. I saw a great question just coming a few minutes ago from I think Bill on fees.
Let's catch that in a second. I want to address this. This one's really huge, and I think people need to understand taxes are very rarely ever, unless they pass some new laws, going to be forward. It's always behind. So if your Celcius platform fluctuates their rates over the course of 2020, it doesn't matter because you're not filing your taxes until 2021. There is 100% certainty using TaxBit that every single nickel will be adjusted properly. I guarantee you that. Now, where's Bill's question about fees? It's up here a little bit. I'll get it for you. There it is. Oops. Brady did it at the same time I did it.
All right. Well, let's tackle Bill's question. Does TaxBit also keep track of fees when we're paying for removing out or cashing out crypto? The answer is yes. So fees, although they may be small, they may be drastic. It depends on the platform. So we may see between 1% to 4% of a transaction may be a fee going to the relevant platform. The great thing about fees is the IRS allows you on capital assets, when you purchase an asset, you can deduct the fee from your cost basis. So you add it into your cost basis. Now you have a higher cost basis, which means when you ultimately sell, you have less gains or losses. And then also if you have a fee on that disposition, you can deduct it from the proceeds. So essentially what that means is you can deduct fees, and we do that for every exchange. So we have our CPAs go in when we're programming these APIs to make sure that we are bringing in those fees and we are deducting them so that it is user beneficial, so that by deducting your transaction fees, you will have a smaller gain or a greater loss. So absolutely, you should use your fees to the benefit of your situation, and we do this automatically. When you sync your exchanges.
Now, I think it's really important also just to kind of we've touched on this before. Let's continue to hammer it in here. If for some reason you're dealing with an exchange that TaxBit doesn't already plug into their API, let them know. It's not that big a deal. Say, hey, TaxBit, Michelle, I'm on HotBit. I'd really like to make sure that the API is plugged in, because that's going to be the deciding difference between me being a customer or not being a customer. Watch how fast Michelle heats up the phone lines. She's going to be on the phone with the engineers. Okay, boys, let's get this thing done. Bang, finish. Yes, sir. We're happy to announce.
If an exchange is frequently used and we hear it from our users, we're going to add it and support it. And I mean, the reason is we have to. I mean, to get taxes correct, we need to know all the sources you are trading on, and we want to make this as seamless of an experience as possible. So there are a lot of exchanges out there, and there are new ones that pop up. And as users request them, we continually integrate and support them. We have a large engineering team that keeps on, adding these different exchanges, and it frankly makes it easier on the user. It makes it easier on our support team, and it makes it a better experience all around. So yes, please, if there is a new exchange that we haven't heard about it, be the first person to tell us, because we want to integrate it, and we have teams. We have teams on our developer team that are solely dedicated to integrations and adding these things as quickly as we can.
Right on, Justin. And I just want to remind everybody, if you are considering TaxBit, hit the link in the description of this video. It takes you right to, you get 10% off your subscriptions, and you help this channel continue to do what it does. So I'm looking for any other questions. I don't hear Brady chiming in with we have a phone guest. Michelle hasn't hit the link and she hasn't come in to say hi. She must be taking care of the kids. I hope that's the reason. She might just not like me. That is a possibility. I hope that's not true, but it is definitely possible. Anyway, I noticed that in our green room, our weekly contributor, Bita Av, our lady on the street, is here and ready to go. Justin, would you like to meet somebody? This is our every week correspondent, Bita Av. Come on in, Bita. Hi, Bita.
Absolutely.
Hi, everybody. Happy Friday.
Happy Friday. Thanks for spending it with us.
All right. How's everybody doing? I see that Bill is here. So
We're doing great. We're doing great. So, Bitta, I know you are a TaxBit client as a direct result of your exposure to this show. Here we have a tax attorney from TaxBit. Do you have any questions for this young man?
I don't have too many questions actually for as far as taxes, because last time I wanted to add Bitrue and you guys didn't have it on your platform, so I actually reached out to the customer support. They gave me the instructions on how to add it and things like that, so that all that got resolved. And also, so that was I was proud of myself that I knew the terms and what to look for. So it's quite an improvement for me, considering how I started and where I am now and my understanding of how everything works. So I think the other question, I've asked this question before, and I think I have my answer, is as far as people that are trading on a regular basis, on a daily basis, we always have discussions as far as if somebody has a wallet that doesn't have a KYC or something like that, and they're trading and they're never going to fiat and sending it to an exchange, because they think they're going to tether and not cashing out, that they're fine, they won't have to pay tax for it, so they're on a daily basis trading. And I'm thinking that's gonna catch up to you eventually. So I don't know what the the definitive answer is, I guess, for that.
That's a good question, Bennett. So I've seen that common misconception of, hey, you only have to pay taxes on crypto when you cash out, right? When you go, from crypto to fiat, and that's not true. Crypto is special. It's a little different. I think that misconception may come from, traditionally in stocks and equities, if I want to buy Apple stock, then I purchase it. But then if I want to buy Amazon stock, I have to sell my Apple stock and then purchase Amazon stock. What's so unique about crypto is you can just do a trade for a trade. It's almost like trading Apple stock straight for Amazon stock. You can trade. You don't have to sell Bitcoin for United States dollar and then buy Litecoin. You can just trade Bitcoin for Litecoin, which really is kind of a unique concept in cryptocurrency. So yes, absolutely. When you dispose of any capital asset, which cryptocurrency has properties of capital asset, then you will have a gain or loss. So everything is tracked on the transaction level. So yeah, be aware when you make a crypto to crypto trade, there is some, tax liability that may arise. It may be beneficial through a loss, or it may be a gain that may have a tax obligation. But what's great is I would definitely direct you, please look to the tax optimizer so that you can look by each asset and say, okay, I should trade this asset instead of this asset because I want to trade that asset that's in the loss. All else being equal, I would rather claim the loss rather than the gain. So I'm going to trade my, Litecoin instead of my Ethereum based on my cost basis pools and acquisition dates.
Well, that's Justin, hang on one second, Britta. That's an excellent thing to know, especially for those of us that are using debit cards or credit cards linked to a crypto account where crypto is liquidated to pay for whatever goods or services the card used for.
That's, it's the best use case. I even think like the point of sale using that card. So we actually have started working with providers. You'll see soon. Hey, when I'm swiping my crypto card and I choose, hey, I want to dispose of my Bitcoin, Litecoin, Ethereum, whatever it is, I should really dispose of whatever cryptocurrency is in the highest loss position, right? And so that's something that we are doing programmatically, working with a lot of these card issuers, we call it spend optimizations. Hey, if you are going to, use crypto as point of sale, then we can actually tell you, hey, sell this one first before you sell this cryptocurrency. And so the spend optimization is kind of the perfect use case and the perfect place to do this. And we even, with some providers you'll see rolling out soon, you can select an option saying, hey, dispose of whatever asset is most tax beneficial. And then we'll just programmatically do it based on, users' consent. And based on whatever the current market value of that asset is and your acquisition is, we'll dispose of the one that, will give you the best tax answer.
So you're partnering with some exchanges to bring that functionality?
Absolutely. You'll see that roll out very soon.
Love it. Bill had two quick questions. One that I took off the screen, and it's important to address. So if there is an exchange that's no longer dealing in your particular jurisdiction and you're a United States citizen, can you go back retroactively and acquire that data through the APIs, or is that something that requires a special request?
Yes, we can. We work with a lot of foreign exchanges. There are some difficulties with a number of ones that have just completely gone out of business. So like Cryptopia, for example. Cryptopia just
bye.
Yeah, right. Like it's just gone. Like it wasn't, it didn't conform with a lot of, reporting obligations in the first place. And now it just doesn't exist. So how do I get my data from Cryptopia? It's actually it's a big issue. So if you traded on that exchange, if you kept good records, then that's very helpful. We can, try to reconstruct what that trading history was and get to the right answer. But yeah, if the data is just permanently deleted because, you traded on some fringe exchange that, wasn't, really compliant and then just disappeared, that can be difficult. And so I would caution to just, do a little research on which exchange is you trade on and try to trade on reputable exchanges. And it's not fun when one just all of a sudden goes out of business and then you lose some funds that you had stored there.
Right on. Well, let's grab this other one from Bill. Let's suppose there's an audit by the IRS. What role, if any, does TaxBit play in resolving the issue? ? Does Michelle O'Connor show up in full armor, the full regalia, and go to battle against the IRS on my behalf, or what?
Please, if you are under, an IRS audit for cryptocurrency, reach out to our team. We want to help you. We've solved hundreds to thousands of IRS audits relating to cryptocurrency. We are very, comfortable and have high success rates responding to the IRS. And, a lot of the audits that we've seen to date have related to, 1099Ks. We've seen 1099Ks basically be wrong and overly report, users' income. And, users may get these scary CP2000 letters saying, hey, you owe the IRS, $600,000, $2 million. We've resolved, multi-million-dollar audits where we've even had cases where the IRS, said, hey, we had this 1099K that, this user generated $2 million in income. So they owe, $800,000 in taxes based on that unreported income. And we've had circumstances where we've actually gotten the user a tax refund, as opposed to, saying the IRS say, hey, you owe us $800,000, after, adjusting for cost basis and gains and losses, we've been able to, respond to these letters and, appropriately figure out what a user's position actually was and save them money. Because a lot of times some of these audits, do over-report a user's actual tax liability. And we don't want you to pay any more than you're legally entitled to pay. So we would love to help you. Please come to us if you're under an IRS audit.
Excellent. And I think I can address this, but please, Justin, if I'm wrong, you're the one that went to law school and got the degree and got licensed, not I. But I think I can answer this. taxes on staking rewards are no different than anything from a Celcius or a BlockFi or a Nexo. If you're earning the asset, right? If you're earning the asset, whether it be through staking or a secondary borrowing lending platform, if you don't sell it, it's nothing. It's a non-event. If you do liquidate it, then it's going to fall under, and we covered this earlier, it's going to fall under what they call interest dividend income. So it's income. It's not a property sale subject to capital gains, whether they be short-term or long-term, because it's income. Therefore, you're going to need to understand how it works with your existing income for that year. What bracket you're in, will it take you to another bracket? These things I don't know, but that's why you subscribe to TaxBit, link below, and get those questions answered for you.
That's right, and we can actually tell you, what your staking income was. So if you, as you start getting all these deposits of random cryptocurrencies, that like, hey, how much was this actually worth? You have to look to the exact timestamp and the value of that asset at the time it was deposited to find out what your actual income was. So we will do that programmatically, and so yeah, we can tell you what your exact income was, so you have those tools to report it.
This is a big deal. Go ahead, Bida. I'm sorry. Now, jump in.
So how about Flare? Like, what is going to happen with your once you get the disbursements for your for people that have the XRP and they are getting their Flare tokens? I mean, right now I understand it's just IOU on Bitrue and people are trading it, but when you actually have it on your possession, like, how does that work as far as taxes are concerned?
Yeah, so upon the distribution, so if you're receiving Flare for whatever it is, if it was watching videos or you have income deposits of it, that would be income, and that would set your cost basis at the time it was received. And so when you sell it, it depends on what the current market value is of the particular asset. And
let's talk about that. Yeah. Justin, for instance, XRP holders, right? XRP holders received literally a 1-to-1 or 1-to-1.001 Flare token, which is called Spark, to every XRP they own, right? Yeah. Now, that's an airdrop. I'm going to get those tokens. My cost basis was 0, or is my cost basis the cost basis from XRP?
No, that's a very interesting question. So based on, a hard fork, so, you owned XRP and a new currency arisen from the hard fork, that will be the hard fork, the amount you received will be income at the time you receive it. So not the time of the hard fork.
I understand. But how is the cost basis established? I did not buy it. So I didn't pay 10 cents for it. I didn't pay 0.001 cents for it. I didn't pay $1 million. I paid 0. Is that my cost basis? Is 0?
I think that would make a lot of sense, but unfortunately that's not how the IRS currently views it. I think your cost basis should be 0, and then when you sold it, you have that gain or loss. How the IRS currently views it is at the time you received this, Spark, what was the value of that currency? So when it whatever exchange I'm on and it deposits that Spark, I have income at the time that hits for the value at the time that hits. I agree with what you, Jerry. I think the best scenario, what makes the most sense is I do think, it should be a $0 cost basis. And then when you sell it, that's hit with gains. But unfortunately for the time being, the IRS views the airdrop, the hard fork, and then the airdrop as income. So it is something that we've been, back and forth with, and that we've discussed, with IRS, different regulators, and unfortunately at the time, that's kind of how it's currently treated.
Well, so you don't get taxed again when you sell it? You don't get taxed again on it?
Well, you will have a gain or loss, but because you recognize that as income, your cost basis will also be set at a higher rate. So you may have a smaller gain or a greater loss because you now have a higher cost basis, but you had to recognize some income on that, so you had to pay taxes on that income. So ultimately, under Jerry's analogy, you'd come out a little bit better if you assumed the $0 cost basis and just did all gains or losses. But unfortunately, there is an income event that happens there. And honestly, it's a little unfair in a sense, if you can use those words, that, a lot of times I don't choose whether I get an airdrop or not. I own a currency, and then it hard forks, and then they just give me something, and then, hey, I just recognize income, and I didn't mean to. So it's kind of this new kind of concept in a way of, wow, I'm recognizing income with zero intention. They just dropped it to me. But it's kind of this weird area of the tax code at this point.
Well, and I think, Britta, the fact that you brought up this question, Britta, is so important, because I believe, well, I don't hear anybody in the XRP community talking about this, and it is so pertinent to understand that when you get a Spark token and then you're going to trade it for an FL something or other, or create an F asset, or dive into the DeFi world and start putting all these different letters in front of different stuff and creating all these different stuff, it is going to be impossible for a human being to track this, i.e. the importance of having a team like TaxBit who has worked out the code to simplify it for us in retrospect, right? In hindsight.
Yeah. So
it really does. I mean, that's worth the price of admission for your subscription to TaxBit. Just that. Not to mention all the other incredible stuff that you guys do. I'm sorry, Bitta, but when the audience is bringing questions, I got to put them up there and fire away. You see this one here, Justin?
Yeah. Yeah, I'll read it out loud real quick. Cell isn't really kosher in the U.S. If we're earning a crypto that isn't supported in our area, couldn't that implicate us tax-wise for those that are doing that? I'm asking for a friend. Yeah, I'd have to dive in a little bit more in what exactly the tax and circumstances are of this cell, but
it actually is kosher in the U.S. You can buy it in the U.S. I have a friend that just bought $48,000 worth of it yesterday using the OTC function. You just can't earn interest in it. You can't earn the asset as interest for your interest.
A platform restricts you from.
Yeah, because it was one of those. It's one of those tokens registered with the SEC. So now it is a registered security, and you can't, as a schmuck like me, receive that as interest. You'd have to be what's the term? Registered investor, something like that.
Yeah, accredited investor.
Accredited investor. Thank you.
That makes sense. Now I'm following. So let's just say you lied about being an accredited investor. You used a VPN or whatever to show that you weren't in the United States, or whatever you do. However, if you end up still getting that cell, yes, the tax rules are still going to apply. So it's kind of that interesting scenario, right? Like it's like maybe you think about it of like, hey, do I still need to pay taxes on drug money?
I mean, $500,000.
The answer is still yes, right?
The answer, yeah, like, you made $500,000 selling cocaine. Yes, you owe taxes. That's income.
Yeah, you see those cases, right? Like when you look at federal court, you'd see the case. Hey, first there's the drug offense. I'm going to indict you for that, but now I'm going to double indict you for your tax evasion for not paying taxes on your drug money, right? So yes, like even if somehow you got this asset illegally or whatever that means is, the tax rules are still the same. You have to pay taxes on them.
Hey, are stimulus checks last year's and this year's taxable? Are they considered income by the IRS, or is stimulus a goodwill function of the Treasury?
No, that's a great question. I would actually need to review the actual bill. I think there might have been a carve out in it saying that it was non-taxable, but I think that I would have to actually review.
Okay. Well, I would look into this for us if you could, Justin, and this would be the scenario. Is my stimulus check taxable? And therefore, what if I spent all my stimulus check on crypto? Is the crypto I bought with my stimulus taxable? I'm joking. We all know yes.
Yeah, buying crypto is not a taxable event. So we'll think about it that way. It's when you're ultimately the disposition seller trade. But yeah, we'll have to look and see. I think there might have been a carve out, but I'm sure we can find that answer pretty quickly on whether you have to pay taxes on the stimulus. So
well, it'd be a good thing to know, and I'll tell you, it would also be a wonderful community service if TaxBit had a couple of simple questions like that answered on your website, maybe whether it be through the frequently asked questions, or maybe just Michelle doing a quick intro video. Hey, folks, thanks for coming to TaxBit. Of course, your stimulus isn't taxable, but let's talk about your crypto. Hit the link below, blah-bitty blue.
That's a great idea. I think that.
I can come up with a million things. I can come up with a million things for Michelle to do for you. Just ask me. I'll roll them out all night long. One last thing, Justin, for TaxBit. One of the things that a lot of my audience does is we're always strategizing on best practices to really leverage and utilize our portfolios to get the maximum from it, right? One of the questions that comes up for me, and it's very difficult, and that is how to actually, over the course of a year of accumulating and sometimes trading, to truly know my average cost per token, my average cost per token when I have multiple buying events over the course of the year. And a lot of us dollar cost average into this space. And we try to do our best with our bookkeeping, and we think we know, and then sometimes we don't know. Is that also a function or feature in TaxBit? Can I easily get the answer to those things by just dividing? Well, we know you bought this much Bitcoin over the course of the year. We know you spent this many US dollars on it. If you divide this into that, that's your average cost per token?
Yeah, we can help for that. So it's an interesting question, right? First, you have tax, which focuses on your realization events. Your question is, hey, what about all my events, my realization and unrealization? Hey, was crypto in general a good thing in my life? Am I up in it or am I down in it? Based on all my crypto holdings, I think we would call that your net fiat position. So yes,
right.
We definitely can have that information available, showing you, hey, throughout through all my crypto investments as it currently stands, I am actually up or down in my net fiat position, which that's not really a taxable number, but it is a very important investment metric.
Right. Well, we strategize and want to use real data to make real decisions to produce real outcomes. And if you're scribbling on the back of an envelope to keep track of this stuff, not exactly exact. Not exactly exact. I'm Mr. Redundant here.
Yeah.
Bitter, do you have another last question before we get to final thoughts and let Justin and Michelle get back to their lives?
Yes. This might not be a tax question, but it's a question that I got from one of my Instagram followers, Ida. And it's a question about why are all the cryptos like Coinbase, for example, you can, directly buy Bitcoin, XRP, and all the other coins directly with fiat. Like you can connect it to your bank account, and then you can just buy them directly. Versus on other exchanges, there's no way of doing that, where you have to actually go from BTC to another or from Ethereum to another coin. And she wanted to know, like, where did that come from? Like, how did that start, and why is that the way we do trading? So that's a general question, I guess.
Yeah.
Okay, so if I was to reform your question, you're talking about wire trading pairs, why BTC ETH, BTC XRP, trading pairs set up like that. It's order books, buyers and sellers, matching them in one category. It's a way that it used to be done back when the stock markets were developed, and these markets were being created back in the late 1800s and through the 1900s.
Okay.
But see, back then, they didn't have a whole bunch of tradable assets. They had one tradable asset. It was called the US dollar. And then all the different stocks or equities or commodities or this. So everything in the old days was the US dollar to whatever. It doesn't matter if we're talking about Chevron or a REIT or a treasury yield or an ETF or a gold ETF. Everything went to the dollar. Crypto turned all of that upside down.
Yeah.
Now all these assets are actually assets and have a value, and they create books and orders. So all the people that got Bitcoin that want to buy something will go into this order book, right? Maybe it's Bitcoin and XRP or Bitcoin and Chainlink, right?
Okay.
Some exchanges like Uphold, which Michelle comes from, is unique. They're not an exchange. Uphold is an online marketplace. They set the price on a kind of coagulated, amalgamated price based off of X amount of different exchanges of the price of that asset at that day, at that particular second. So you're not in an order book on Uphold. But if you go to Coinbase Pro, you are. But if you go to Coinbase, you're not.
Yeah, it's a great.
If you go to US, you are in an order book setup where you, the purchaser or the seller, have to go into a specific market to exchange or buy your stuff. So there's differences between exchanges and marketplaces. There are a difference, although the end result is the same. You bought it or you sold it.
Got it. That makes sense now.
And Justin, you want to chime in on that? Did I not cover something well enough, or?
No, that was very thorough, Jerry. I think the other point to say, hey, accepting money from banks, there may trigger some other, money transmitting license regulations that could come up as well. I mean, I don't speak as much from the exchange side, but I have that is something that I've heard a lot from exchanges as well.
To answer Joshua's question, yes, you can set up your Uphold account to accept your Brave browser BAT tokens deposited directly into your Uphold account. So that's that. Any other last questions, folks? Get them in quick. I got Justin here just for a little bit more. Justin, just to let you know, and you're under no obligation, but Bitta, Brady, and I do a little after show kind of decompression. If you want to hang out and chat, you can. If you don't, that's cool. Nobody will think any less of you, but that option's available to you once we complete our what we call final thoughts. Speaking of which, Bitta, final thoughts.
Well, my life is getting back to somewhat of a normal, so I'm back to work full time. So it's been quite an adjustment. So I haven't been following up on a lot of news. Just been getting bits and pieces, but it's even hearing the little news that is going on, or a lot, I'm able to process it. It's just it's wonderful to understand what's going on in the world. So yeah, just trying to get back to normal.
Right on. I am so glad to see you, and I'm happy to hear that. That's good news. We'll see you backstage now.
Awesome.
Okay, you want to say goodbye to everybody?
All right, bye everybody. Thank you for coming here and explaining stuff to us, Justin.
Thank you, Bitta. It's been so great talking to you, and I appreciate this segment, Jerry. Final thoughts. If you trade cryptocurrency, let us help you. We're user obsessed. We want to save you money. We want to make this that optimal experience, and we want you to. We want to figure out how we can optimize for you. So, looking forward to helping you out this tax season.
Right on. That is so cool. So, yes, Nexo pays you an XRP if you're holding XRP with them. They pay you if you're a U.S. citizen, whatever you're holding with them, you'll earn the interest in that asset. Hey, Brady, let yourself in because I'm never sure which or what. So I'm going to let you in. Hey, Justin, see you backstage in a minute. Or if you got to go, Pure Vida, you go. Brady, final thoughts. Unmute yourself, you producer stud.
Adding taxes to everything else is always everyone's nightmare, but I guess at least with how would we describe it? Tax arbitrage. I think that at least makes it more. You feel like you're getting a little more this year because you can arbitrage your way in and out of your liabilities to make your refund either bigger or, like you were saying, hold on to some of your losses so you can use them when you need them. And it's obviously no one enjoys doing it, but at least these people have an idea and a concept of how to do it and make it, I don't want to say exciting because it never is, but at least it pulls you in because you want to learn more, because if you get to keep more, well, that's what it's all about. It's not how much you sell it for, it's what you keep. So I guess that's my final thought. And it's homework, but we all got to do it.
Right on, Brady. We'll see you backstage in a second. So, wow, what a great show, everyone. I'll tell you, yes, it's absolutely invaluable to understand your tax liability, right? And TaxBit is one of many outfits that are out there. It's not the only one. It just happens to be the one I'm the most comfortable with. I am a huge fan of TaxBit, even before I was able to get them on my show and actually start talking to them. If those of you that remember, I had Austin from TaxBit back in the day. What an incredible company. And they're doing a great job, and they're expanding into Europe, and they'll be in other countries. And it's really about helping us. Now, here's the thing, the truth. If you're in the United States, or you're a United States citizen living abroad like I am, you can't escape the IRS. There is no escaping the IRS. And until they change the tax code, all cryptos are considered property. Well, cryptocurrency and property are two different things by definition, but not according to the IRS. So using these assets as currency can be cost prohibitive until the rules change. So knowing the rules are important. Well, for me, I would rather defer all that tax info to the pros, the guys who know it over at TaxBit. That's why I'm a happy customer, and that's why I am absolutely thrilled to endorse them and talk about them, because not only are they helping me, but they're helping all the folks that I know that are dealing with them. That leads me to my closing thought for the night, and that is each and every one of us as an investor, our job is to learn the rules of the game, right? Become a better investor so that we can produce better outcomes. Well, over the last 3 months or so, since I started posting my schedule and gave people the ability to schedule time and discuss their portfolios or questions that they have about crypto, I have put a tremendous amount of hours on the phone talking to both old friends from my past, even old high school buddies who saw my stuff on Facebook were scheduling appointments. I've decided to create what I call the Beyond Moon Investment Club. It's going to be on Patreon. I put a link in the description of this video, but I do not want you to join until February 1st, if you should choose to join. We're going to do bi-monthly meetings. I'm going to put out unique, crystal clear content. I'm going to have special guests. We're going to give advantages to the Patreon members. I'm going to have 2 tiers, one for retail investors, people that just want to come and learn about crypto, stuff like, how to set up an exchange account, right? How to earn interest on my crypto, to all the way advanced stuff like the actual investment club. I'm going to build a unique fund, a portfolio just to run with certain members of the club, right? For the second tier of the Patreon group, where we're actually going to be building the crypto portfolio. And I'll kick it off with X. I think it's sitting at around $2,700 or $2,900 right now. And we're going to build that. And we're going to leverage all the tools that we've been learning about over the course of the last year and a half or so to build a powerhouse portfolio that's producing money on a daily basis, as well as enjoying the beautiful capital gains of this upcoming bull market. For those of us that have been around for a while, this next year is going to make all of us extremely happy. Every single day, I continue to get confirmation that our market caps are going to grow. Public company after public company are talking about their inclusion into this space, whether it be adding Bitcoin to their P&L, which is they're creating a business or getting in business with it, or like MicroStrategy's putting it on their actual balance sheet as a treasury reserve asset. We're even seeing this week inclusion of Ray Dalio putting out an incredible multi-page commentary on his real thoughts about Bitcoin. And I'm telling you, it's bullish. Now, we all know Elon Musk played with us a little bit with his little Bitcoin in his bio, and then his little comment that he put in there later in the afternoon. But the fact of the matter is digital assets are on the lips of countless people around the world. Its popularity is growing, as it should. Governments around the world are printing money at unprecedented rates, debasing their local currencies, setting the stage for either A, major inflation, or B, hyperinflation. Stay tuned in. Remember, each and every one of us is 100% responsible for our own financial health. And the more you know, the better decisions you'll make. So keep tuning into the channel. Thanks for coming tonight. Hit the like and subscribe on the way out if you haven't already. And until next week, everyone, Pura Vida.